Hello and welcome everybody. Welcome to my next NAP. NAP stands for Nonprofit Auditor Points, and today I want to start a new series of NAPs. Our previous series was on Form 990. Everything that you need to know about Form 990. So if you're interested, look at the previous NAPs. And for the next about 10, 11 NAPs, we're going to talk about the most complicated area in nonprofits, in my opinion. It's revenue recognition. It's very confusing for a lot of folks who participate in nonprofit accounting, board members, management, and accounting personnel. And it's complicated for a reason, because it's not just one type of revenue. Nonprofits revenue governed by two completely different accounting models, two completely different rules. And unless we understand what they are and what revenue falls within each bucket, we will never be able to properly record revenue for nonprofits. So in today's NAP, it's about big picture for revenue recognition, overall framework, because my goal is to explain from the beginning, step by step, how we need to look at every revenue that nonprofit receive and make sure that we properly identify it and properly record it. So first of all, let's start with what are those two big types of revenue for nonprofits. For number one, it's exchange transactions. Number two, contributions. In other words, you might hear from time to time, exchange transactions, it would be like earned revenue. And contributions sometimes can be called gifts, donations, grants, pledges, but the big word for that, it's a contribution. So again, two major buckets, it's exchange transactions or earned revenue, and the second one is contributions. That's the complexity starts because these two different types are governed by completely two different standards, and revenue is recognized depending which bucket revenue falls into. So exchange transactions are based on a standard, and I will just for simplicity purpose call it as a number. And if you guys want to remember, you can just remember number. So exchange transactions follow 606 rule. And that's rule for revenue from contracts with customers. It sounds very much like for profit. And that's because this really revenue recognition, not specifically for nonprofits, it's just for overall companies. So it's a standard 606 exchange transaction. Contributions revenue recognition fall under different standards, and it's 958 section. Section 958, and it's specific for nonprofit revenue recognition. Section 958. Again, they work completely different, and if you understand the difference, you will really understand revenue for nonprofit. So let's slow down and make it practical. How we can identify what is exchange transaction versus a contribution. So exchange transaction, if you think about it, that's exactly what we say. We exchange. I give you X, you give me Y, for example. We exchange between two parties. So it happens when nonprofit provides something in exchange to the party that pays for that service. For example, there is exact exchange between parties. So meaning that nonprofit provides some sort of services, and the another party paying for the services something of the similar value. It sounds like very similar like a for-profit world. Like if you go to any store, you buy inventory item and you paying for the item. You received an item, you gave a store money for the item. That's exactly how works in for-profit world. And that's standard 606. For nonprofits, it's exchange transactions. So now let's see what revenue nonprofits actually recognized based on 606, exchange transaction. That would be program service fees. When nonprofit provides services, like a kindergarten or any other type of schools, when the participants paying for the after-school programs or for daycare programs, but nonprofits provide services and participants paying directly for the services that they received. Tuitions, various types of tuitions. That again, when participants paying for their own participation in the program, it's exchange between participant and nonprofit. Sales tickets. It could be during fundraising event when donors, when the participants come for the event and they pay for a ticket. So they paid for a ticket for themselves and go to the event. And nonprofit, that's exchange transaction. Nonprofit recognized revenue. Memberships, where members gets a benefit. For example, it's nonprofit can provide to its members annual educational classes on how to do fundraising or how to do accounting. And nonprofit says you can become a member so you can participate in our classes, and members paying for the services and they have access to those classes. Selling merchandise. Selling merchandise for nonprofits, revenue recognition, it's exactly the same as for regular for-profit companies. You sell item and you recognize revenue. So it's direct exchange transaction. And the last example would be certain government contracts, but very critically here, not all government contracts, only the contracts where the government is direct recipient of these services, not anybody else. When the government hire a contractor, so contractor provides services to the government. For example, government needs to train the employees of the city of, let's just say, Oakland, wants to hire a contractor to deliver a training class on how properly to be an ethical government employee, for example, and they hire a contractor who comes and delivers this class. That's a government contract. You will see that government does a lot of grants, but there's also plenty of government contracts. So again, it's only when it's direct exchange between government and recipient of the funds. So that's again standard 606. All of these type of revenue operate as a regular business, and they are revenue recognized under normal 606 standard. Now, the second bucket, the second standard for revenue recognition, it's a contribution. And contribution is completely different. What is contribution? Contribution is non-reciprocal transaction, meaning the person or entity or whoever gives money to nonprofit receives nothing in exchange. Maybe thank you letter, maybe recognition, maybe but not similar value in exchange gets happening between the person or entity that pays to nonprofit and the services that nonprofit provides. What it means that most likely benefit will be received by outside third parties that do not pay for the services. Again, it's not an exchange transaction. There is nothing in exchange that entity that pay to nonprofit receive, except again, thank you letter or recognition or small token of appreciation. But the bottom line that the entity that pays do not receive anything of the equal value that they gave. So what the examples of the contribution? Individual small donations, when the individual saying, hey, I like what you do, here you go, $50. Foundational grants, foundations specifically designed to support nonprofit organizations, and they'll say, hey, we like your mission, we want to support cats, dogs, we want to support social justice missions, we want to support research, we want to support medical cancer findings, and whatever your nonprofit does, they support and they give funds towards that mission. Corporation also provide gifts. They will say, hey, we really like what you do and what your nonprofit does, maybe in the community, supporting youth or supporting elderly, and here you go, there's money for you. So you can see in all these examples, individual donations, foundational grants, corporate gifts, bequests, entity that gives money to nonprofit, they do not receive anything in exchange from nonprofit. Benefits will be received by somebody else, outside third party. So all of these parties who gives money, all they will receive, thank you letter, recognition, maybe small token of appreciation, maybe their name in a newsletter, but not equal exchange of value. So these contributions typically given by entities, we call them donors or funders, just to support mission of nonprofit. So not support, they can specify exactly how they want to support it, but it's overall to support organization mission. So the main difference between those two buckets are either exchange transaction, both parties exchange similar values. From here we have a service or goods, and here we having money. In non-reciprocal transactions, contribution, there is no exchange at all. The entity that donates money only can get token appreciation or some recognition, nothing. So what it means, the very important thing that if you understand, it would be super valuable. Every time a nonprofit receives a letter, either for exchange transaction or for contribution, just looking in a letter or heading, you cannot identify which bucket it will go, exchange transaction or contribution. You always have to look in the substance of the agreement. And it can only be identified if you read the agreement and you understand whose party is involved, what party is involved, and what they're gonna do. And if you find the exchange, then it's gonna be 606, revenue recognition exchange transaction. If the parties do not exchange anything, it's called non-reciprocal contribution, and it becomes standard 958, nonprofits. A lot of nonprofits fall into trouble because they're trying to analyze agreement that they receive or anything in the writing that they receive. Just they see amount, what it is, and they're like, oh, That's from the city of Oakland. It must be grant. You cannot. You need to know. We need to know. For example, city of Oakland gives you money, but what nonprofit needs to do? If nonprofit gonna serve directly city of Oakland, its employees, they like contractors for the city of Oakland, then it's 606 revenue. If the city of Oakland just gives the money to support mission of nonprofit, just when nonprofit clean the streets, they just support youth of Oakland, that's not an exchange transaction, that's contribution. So again, you need to look in the substance of the agreement. That's very critical. So it's not just the academic. Why we need to understand if it's exchange transaction or contribution, because it depends when and how revenue will be recorded. When the amounts will appear on financial statements, it might affect your surplus or deficit on the books, and your board needs to understand from the budgeting standpoint how account for these funds, what their strings attached. Again, if it's a earned revenue, which is exchange or contribution, there could be different restrictions, let's just call different strings and responsibility attached. So the first step is very critical. If you properly identify exchange transaction versus contribution, you're already in a good position to proceed. Another common mistake that we see very often, the nonprofit, because it's difficult to understand exchange transaction versus contribution, but nonprofits understand cash, because if they have funds, we have money to operate. If we don't have money, so we cannot do anything. So what they do a lot of time, nonprofits delay recognition of revenue, don't record anything until cash comes to their bank. And as soon as cash come in, they record revenue. That's not GAAP. That's not general accepted accounting principle. It's called cash basis accounting, and it's not correct. So nonprofits should not just sit and wait until they receive cash and recognize revenue. That would not be proper treatment. Why? Because sometimes nonprofit can receive cash and it's not their revenue yet. So they do not have right to this cash yet. They need to do some work in order to it to become revenue. So that would be overstatement of revenue. And sometimes nonprofit already have a right to revenue, but the cash is not arrived yet. So your revenue would be understated. So once again, what I want to say, contribution accounting and exchange accounting is very critical, and it's very important to understand. And that's where we need to start first, to know which bucket each revenue falls into, exchange transactions or contribution. And if you remember, this is the basic, everything becomes very, very logical and easy to understand. But identifying the bucket is very critical. So, but again, just to confirm, if you feel slightly confused about revenue recognition, you're not alone, because nonprofits allowed to be operating in these two different worlds. One world, it's like a hybrid between for-profit and non-profit. So non-profits allowed to do the same type of revenue as for-profits. So therefore, it's exchange transaction 606, but additionally, non-profits have their own type of revenue called contribution, and it's governed by completely different standards, which is 958, and these are bucket of contributions, gifts, promises, pledges, bequests, everything that for-profit world does not have ability to receive. So nonprofits, it's a hybrid of for-profit revenue plus additional type of revenue. And thank you so much. We will continue talking about revenue in the next step, and we will go deeper into earned revenue, which is under 606 revenue, and how we will discuss how 606 standard applies to nonprofits in the real world. We will look at few examples to make sure that we understand revenue recognition under 606. Thank you so much. Looking forward to see you for our next step.